Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was a day of profit booking on Dalal Street, given the fact that the Nifty has snapped out of a 7-day gaining streak. So we did cool off, but just about around that 20,900 mark is where we are perched at. So 21,000 level, kind of eluded us, but let's see whether or not we manage to, climb that, benchmark this week itself, or whether we look at the claiming that level sometime around next week or thereabouts. But looking at the mid and small cap indices, they managed to outperform the benchmark indices today. The breadth was also fairly positive in favor of the gainers. If you look at some of the pockets that were doing well today, autos, PSU Banks, pharma, these were the pockets among the sectoral gainers. On the flip side, FMCG, that pocket did well yesterday, but today it came under a fair bit of profit booking. So FMCG and metals were among the top sectoral losers today. If you look at some of the gainers on the Nifty, the likes of Adani Ports, of course, Adani Group's stocks continue to have a good run in trade. So Adani Enterprises ended the day on a negative note, but Adani Ports managed to emerge as the top Nifty gainer once again. Power Grid, Ultratech, Cement, Cipla, Titan were among the other gainers. On the losing end, you had the likes of Airtel. There was a block deal in the counter today. Reacting to that, the stock was down somewhere around 2.5% or thereabouts. HUL, ONGC, L&T, Apollo Hospitals, Tata Steel, ITC, Hindalco are some of the stocks that were on the losing end. But if you look at the action in the mid-cap end of the markets, one stock that stood out, of course, was Paytm. That stock tumbled over 20%, in fact, hitting lower circuit at open, given the fact that the company is planning to curtail its low-value personal loans below the ticket size of 50,000 rupees. In fact, it will be expanding its high-ticket loans, and in fact, the company has said that this will not have any impact on its earnings, as it is seeing good demand when it comes to high-ticket loans. But, of course, the street is not buying that, given the fact that, we saw quite a few downgrades come in. Goldman Sachs, for one, has downgraded the stock. In fact, the target price has been cut to 840 rupees, and it has lowered its FY24 to FY26 revenue and adjusted EBITDA estimates by 10% and 40% respectively. In fact, the path to profitability could also be delayed. Goldman Sachs believes that the company may turn profitable somewhere around FY26 and not FY25 that the street was factoring in. So 18 to 19% kind of losses coming in on the shares of Paytm today. But if you look at the other mid-cap movers today, sugar stocks were in a spot of bother, given the fact that the government has notified that it will reduce or curb rather sugarcane, ethanol production from sugarcane, and that has come as a setback for some of these sugar names. So you had Sri Renuka Sugar, Praj Industries, all of these counters losing around 4% or thereabouts in trade. What was also not doing well was shares of Network 18 and TV 18 broadcast coming under a fair bit of profit booking today. Aside of that, on the gaining end, you had stocks like ITI. That was among the top Nifty 500 gainers today. But let's move forward with the show and, bring on board our technical expert for today. Joining me is Kunal Rambhia, who's the fund manager at The Streets. Great to have you this afternoon. Kunal, I just want to get in your sense. We are witnessing profit booking at highs. We came very close to that 21,000 mark yesterday. Expectations were that we would manage to climb that peak, but didn't really happen. What's your sense? Do you think the Upmove will resume tomorrow, or do you think the bout of profit booking that we are witnessing will continue into tomorrow's session as well?
Yeah, hi. Very good afternoon to everyone. So if you look at the Nifty, the up rally actually started from the end of October, when Nifty was trading at around 18,800 mark, and presently it's trading at around 20,900, and that's almost staggering 11.5% rally on the index. And the maximum return which we earned on the indices were in the just last 6 to 7 days, right? Where the index was trading at around 19,700, and now it's at around 20,900 kind of level. So a bit of profit booking at this level is certainly likely. But if you look at the bank Nifty per se, then it has not really outperformed the way Nifty has performed. So I think there is little more room for the upside on the bank Nifty front. But yeah, kind of profit booking from the present level is certainly likely, and we are heading for the major announcements tomorrow. So I think that might just bring in some kind of nervousness. Trend is positive, but it's overbought as of now.
Right. Your thoughts on Paytm, as I was mentioning, shares cracked over 20% in early trade. And if you look at the charts right now, I think 18% lower or thereabouts. Would you see or would you call it a trend reversal on the charts? Or do you think, the kind of correction that we've seen today presents a buying opportunity?
So yeah, as you rightly mentioned, seems like a trend reversal. Reason being, from November 2022, this counter was trading at around 450 mark, and from there it went up to straight levels of 820, 830, and there was a clear positive trend. What we are witnessing on the chart is like last couple of days, this counter was in sideways with negative bias. Seems to be like a distribution going on the chart, and suddenly we saw a gap down opening today. Certainly, the risk reward ratio is very unfavorable for anyone who wants to go long on this counter, and someone who is holding has to just hold on. But yeah, for now, it's a trend reversal. One needs to watch out for the levels of around 550 mark. I think that can be a good support on the chart. But till then, I would always advise our viewers and our investors also, we advise just to stay away from this counter for now.
All right, stay away from Paytm right now. Could see further correction going forward. Your thoughts on the sugar stocks? Praj Industries in particular, given the fact that the government has come out with a notification, wherein it has said that ethanol production from sugarcane needs to be curbed. Of course, when we know that sugar output has been flagging off, the focus will now more be on sugar production, right? So, particularly on Praj Industries, what is your call?
See, again, the trend is absolutely intact in spite of today's sell-off. If you see the low of the day, that was at around 584 and it closed at around 607. So the sell-off was also considered to be like a buying opportunity as of now. Trend is certainly on, and the support witnessed on the chart is, I think, 575. One can hold on to the position, buy on dip near to 575. The stop loss can be 575. I think this kind of trend might just continue for long, and this ongoing trend, whenever we witness some kind of correction like this, we always consider this to be like a buying opportunity until the support is taken out. So 575 to watch out for.
All right, 575 levels to watch out for on Praj Industries. But what about a SpiceJet? The stock was, had gained somewhere around 20% on the back of, news flow that the company will be considering the routes for fundraising on the 11th of December. The stock has hit a 52-week high. 52.29 is where it's at the current juncture. Would you expect more upside, or do you think here on some bit of profit taking will emerge?
So yeah, if you look at the formations, they are very strong, and it's a massive curve formation which we are witnessing from the peak of May 2022 so far. Now, if we go back and check out the past, I think 1.5 years back, this counter was again near to 52 itself. And now it's reaching back to the same level. And this is for now a minor resistance kind of. But the way the volumes are picking up on the counter, I don't think this will stop here. One can certainly buy on dip. This seems to be a unfavorable risk reward ratio for new entries. But yeah, keeping the stop loss of around 45, one can definitely think of buying. This counter has a potential to reach around 65 to 66 mark.
All right, risk reward, but looking unattractive here at the current juncture. But what about an LIC? The stock has managed to recover from lows. In fact, it was one of the buzzing stocks today. 52-week highs here as well. 800 levels back on the charts. Would you say the risk reward is favorable for this one now, LIC?
So LIC, the first breakout was seen at around 690, and there was just a couple of days back when they announced the new policy also, and that actually brought in the interest. The breakout at 690, the first target of this entire formation is around 820. This counter made a high of around 800 today. But yes, this entire downtick which we witnessed since the IPO days, this entire downtrend is coming to an end, and now the fresh uptrend is starting with a massive volume. So yeah, it's a buy on dip counter, keep accumulating till 680s. The positional stop loss on this is 650, which is far away from the present level, certainly. But yeah, it can be bought at the present level also. And on the decline, I think this counter now can show us the levels of 1,000 very soon.
Right. When you talk about other PSU insurers like GIC, RE and New India Assurance, anything you like from that pocket, GIC, New India, because these stocks did see a fair bit of run up last week. Do you think that's also the start of a new uptrend?
So, if you remember, I always generally discuss this NIACL, which is New India Assurance, on our morning shows also. The only reason for that was that a massive consolidation and a curve formation on the chart. We started buying this counter from 125, 130. We're still long onto it because this is a complete trend reversal. So out of a GIC and NIACL, I think I would prefer NIACL. One can certainly think of buying at 235. Also, the stop loss for this will be 200 levels. But I think we are looking at the levels of around 300 to 325. That's a very positional target which I'm speaking about. But yes, it can be an investing bet from here on also. Keep buying on decline. The levels which need to watch out as a support is 200. Till the time the counter is about 200, one can certainly buy on this.
Right. Also, IEX, one of the top movers in the FNO markets today. I think it has come out of a downtrend after a long time. IEX, how should one trade into this one now?
Extremely bullish on this counter. Again, it gave a fresh breakout today itself, and that breakout level was 155. It managed to close near to the day's high, and today's volumes are, mind you, almost highest volumes in the last 2.5 to 3 months. So yes, we just need to check out the delivery volume for a bit of confirmation, but otherwise it's a fresh breakout. I'll just wait for a day or two to see whether it sustains above 155 or it's a false breakout. But if it manages to sustain above 155, I think one can certainly initiate a buy from the short term to mid term perspective. Also, the immediate target on the chart is 175, followed by crazy high levels of 225 to 230.
Right, when you talk about exchange stocks, divergent trends when it comes to an MCX and a BSC, right? MCX, has been hitting fresh 52-week highs, but BSC on the other hand, after the stellar up move, it has come under, a fair bit of profit booking and has been cooling off. So between the two, would you advise one to look at MCX now versus a BSC?
See, honestly, if you look at the percentage change from the extreme low levels, both the counters have been doing phenomenally well and they are still intact in terms of trend. But as you rightly said, BSE seems to be like a bit of tiring at the peak level. I would definitely go ahead with MCX because even if you look at the MCX today's performance, it was up by around 4.5% in the trade. The risk reward for both the positions from here on are going to be unfavorable. Certainly, reason being too much of run up is seen. But if someone is willing to buy at this level, one can keep the stop loss of the swing low. So on MCX, one can keep the stop loss of around 3050, 3060 and hold on to the position, create new position. But just make sure that none of us should get stuck if there is a trend reversal anytime in future also. So maintain the stop loss strictly.
Right. Maintain strict stop losses where these stocks are concerned. How would you play the real estate pack now, Kunal? Some of these stocks have given stellar returns on a YTD basis. Would you look at a stock like Prestige Estates or Oberoi Realty at the current juncture?
As you rightly said, too much of run-up is seen. Honestly, we are just staying away from these counters, all the counters as of now, the only reason being unfavorable risk-reward ratio. And there are many other pockets where we are getting fresh breakouts coming on the chart with the extremely favorable risk-reward ratio. So from the entire risk-reward and keeping risk-reward ratio in mind, we are staying away from the real estate peg as of now.
Right, and from the banking pack, we know that ICICI, HDFC, all these stocks have started participating in this leg of the rally, but still they have a lot of catch up to do, at least when it compares to their PSU peers, right? So between the two, or perhaps you could even bring in Axis in the equation. So Axis, ICICI, HDFC Bank. Given a choice, which one would you pick?
See, again, as far as my personal bet goes, I always give a lot of importance to risk-reward ratio. So I would not really pick up ICICI or Axis at this point in time. I'll go ahead with HDFC. It's still available near to those low levels itself, and the strong support on the chart is 1560. Counter is trading right now at 1630. I think there is a lot of room for and the potential for the counter to go and make a new fresh high of around 1775, 1780. So I think out of three, I'll go ahead with HDFC Bank for now.
But would you say the same for SBI as well, given the fact that the entire PSU banking pack has rallied quite a bit, but SBI, if you look at that particular stock, that hasn't really fired up.
I'm just waiting for the breakout of 620 on SBI. Honestly speaking, it's been in sideways consolidation, and the formations on the technicals are ascending triangle, which are extremely bullish, and the failure ratio of this is like 2 to 3%, success ratio being 96, 97%. So yes, I'll go ahead with, if you ask me to select one out of HDFC and SBI, I'll go ahead with SBI. Buying about 620, stop loss will be 585 to 590 kind of levels, and the targets can be 675 to 680 levels.
All right. SBI, from a risk reward perspective, looking attractive when it comes to banks, private banks like HDFC Bank and ICICI Bank. Looking at the trends today, Kunal, anything that caught your attention or that you would be advising investors to pick up now, investors or traders for that matter, at least for the next couple of weeks?
Certainly, I am extremely bullish on IRCTC. If you saw today's behavior, this counter just 2 days back was trading at around 720, and in today's session, it made a high of 765, and it's been almost 2.5% up in today's session. Yesterday also, it was up by around 3.5%. So I think this entire longer consolidation of IRCTC is coming to an end. One can certainly buy this from mid-term to long-term perspective. Also, the stop loss on this will be 720, and the targets can be as high as 850 to 900 kind of levels. And the second counter, which we shortlisted just right at the end of the market today, was Glenmark Pharma. Again, a broader sideways consolidation, and see the last 15-20 minutes move on the chart. It's been crazy move and with good volumes. So certainly one can buy at 825. The stop loss on this will be around 800 levels, and the targets on this chart can be around 900 to 925 levels.
Since you spoke about IRCTC, what are getting your thoughts on IRCON? Today, of course, the stock was under pressure given the fact that the government is, selling stake, 8% stake via an offer for sale. But on a YTD basis, the stock has given 160% returns. So how is an IRCON placed on the charts now?
So it's been too much of run-up, to be very honest. And if you look at the last 3 to 4 weeks consolidation, this counter is just hovering between 150 to 175 kind of levels. And today in trade, because of this announcement, the update, the charts are extremely negative as of now. I would stay away from this counter. I would say rather, wait for the consolidation and the correction to come in place. I think 140 can be a good level to initiate a buy. The trend is certainly intact, but when we are getting some other counters, where we have the momentum picking up, I think we should be focusing on that. And for time being, we'll keep IRCON aside and we'll revisit this chart again near to 140 mark.
Last one, ITI, this stock has been, rallying in today's session at least, a double-digit up move coming in 10%, and it's one of the top gainers on the Nifty 500 index. Any play here, ITI?
Certainly, after a long time, this counter gave a breakout of around 130 levels, from 130 straight away till 300. I'm just talking about the positional charts, and at this point in time also, it's looking amazingly attractively placed. I think the previous high is the immediate resistance, which is 325. Above this counter has the potential to go till 375, 380. So one can just wait for now, just wait for the breakout of 315, because in today's session we saw a bit of profit booking also coming in, right? So around 320, above 320, one can initiate a buy. The stop loss will be 300 and the target can be 375.
All right, that's the view then on ITI. But, before I let you go, of course, tomorrow is the RBI policy decision at 10 a.m. Of course, the Nifty Bank will be in focus and all the rate sensitives will also be in focus. But particularly for Bank Nifty, what are the kind of support and resistance levels you'll be watching out for tomorrow?
So we saw the massive breakout on Bank Nifty spot chart, which was at around 46,300. I think that can be the strong support for now. Today also, you can see the low was around 500 kind of levels. So from the today's low, 200 points more on the lower side is a strong support on the chart. And for the resistance, we can consider 47,125 kind of mark. So these two are the levels which I'm watching out as the support and resistance for tomorrow. But again, as we discussed in the beginning itself, I think Bank Nifty has a more potential for going upside. So keep the resistance level in mind, and if by any chance it manages to cross above that, one can certainly go long on the Bank Nifty tomorrow.
Right. So since you're mentioning that you see more upside on Nifty Bank, 50,000 in the next couple of weeks could be a reality, right?
Certainly, we never thought of around 2,000 points rally in 5 days, but yeah, that turned out to be the fact. So 50,000 is something which we are also looking out for now.
All right, 50K on the Bank Nifty, of course. I mean, a couple of months ago, who would have thought that we would see these levels, that too before year end on the Nifty Bank, and of course the index itself.
Certainly.
Well, with that, I think we've come to the end of this edition of Closing Bell. Thanks a lot, Kunal, for taking out time and joining in and sharing your perspective on all these stocks with us this afternoon. But with that, thanks a lot for tuning in to all our viewers. At least, we will be back at 8:30 a.m. tomorrow morning. And don't forget that it's policy day. So we will be getting you live coverage from 10 a.m. onwards. So tune in for that. But for now, of course, goodbye from me. Have a great evening and stay tuned to Moneycontrol for all your other news and updates.